can you tell us a little bit about what happened with the FT?
About what you mean why I got thrown off?
Yeah, Robert and I were talking about it yesterday.
I'll tell you why. I have to be careful with this because they were they had like a summation of an interview with Putin and what Putin was trying to accomplish. And Putin, the Russians had come out and said, hey, we'll provide you with the we're not the ones driving this higher. It's, but we will provide the natural gas. And so then they were getting on Putin that, he's just trying, because he says, we're not going to keep selling it to you in the spot market. What Russia wants is long-term contracts. Who wouldn't want that? They built that pipeline. They want, so if they squeeze the spot market a little bit, they will probably get what they want, which is for these a lot of Europeans to sign long-term contracts. Because you can see, and that's why, let me add parenthetically, that the weakness in the yen is really interesting to me because everybody, and even Bookvar, and I got an upcoming podcast with Bookvar.
Oh, beautiful.
And then somebody, Kevin Duffy, who I don't know, so I'm going to have to in November. And John Taylor from Stanford in January at some time. He requested to do one with me, which I thought was a great honor. So, but I'll be waiting for that one. So Putin had said, no, we're not. We're trying to, pump enough or push enough natural gas through the pipelines to push prices, but they were going after them. So I said, well, if Europe is so, because the whole discussion was about Europe being so dependent on Russian gas, which anybody could see this was coming. I mean, you can't be surprised by it. Hell, I've been blogging about it for literally for 8, 9 years, 10 years. And I keep bringing up the issue of Gerhard Schroeder, which a lot of the media seems to forget, but that has a huge role in it. So I got smarmy. I deserve to be thrown off, by the way. Well, no, I don't, because that's such censorship and the shit that flies through the FT. Because I read the streams that follow articles because I like to see who's going, maybe, and there are some very bright people who write in, so it's worth. But I got a little smarmy, and I said, "Well, look at." My response was, and people I'm sure will take offense to it, but it's just me being me. Because I've always, if you follow, and Matt, you've been talking to me, listening to me, following me for long enough to know that my whole basis, I was reading Alinsky before and activating with Alinsky. So I'm one who sticks needles into people, but I'll stand up and take the beating accordingly. I don't just stick needles in, but to me, it's purposeful. And I've been doing it. I'm 68. I've been doing it probably since I'm 17, 16, going in anti-war demonstrations, open housing. I've been involved. It's been my calling in life, so to speak. I get involved when I make no bones about it. I'm very pro-Israel, but that doesn't mean I'm not critical of Israel. I'm very critical of Israel on many things. Where I'll get into people with that too. But I see it in a different light, and I read deeply into it. But so I got a little smarmy, and I said, well, if you don't want to be so dependent on Russian natural gas, you can buy, gas from Israel. Has those 3 giant natural gas fields off in their territorial waters that were developed by Noble Gas. I said, you can buy your gas from there. A lot of it's going through pipe through Cyprus, and even in Egypt buys a lot of natural gas And then I made a smarmy comment, I'm not going to repeat it, about Europe's history. And then I completed it. And actually they printed my response. And then an hour later, I got a notice that I'm banned. But it got through because the way I wrote it was not incendiary. And I put it in which taught me a lot about how they do their censorship. Usually it must be like more headline or first line crafted, because it took them a while. So somebody must have called and complained. I'll leave it at that. It was not a nice comment, and went back to World War II about burning certain people. So they didn't like it. They tossed me. So that's okay. I can trust me.
It's not okay. It's scary. That scares me.
You know what? I know the rules going in, okay? And as long as I know the rules, and I knew it was a smarmy comment. And usually all my comments to them, and I get delayed on some, by the way, because I'll attack FT journalists and they have to, and that's what we'll be at the beginning going, well, this person has no idea what they're talking. I did one this week and they actually came back. It was on the, it was written by that Colby Smith, and it was discussing the dollar, and she had no idea. I said, this is an issue of debt. And actually they wrote an addendum. She wrote an addendum to the article following my comments, talking about the debt load. It was an article, I think on Tuesday. So, I am very measured. This one I was, because to me it's so stupid. And the way the FT writes, like everybody else, is, access. So they're, if you don't understand what's taking place in Europe with the Russian, the whole Nord Stream, and then the FT, and I've been on them for a long time because they've elevated Merkel to to like the goddess of democratic liberalism around the world, especially after Obama left. And I said, they have no idea what they're talking about. And so much of these problems are a result of Merkel's terrible policies. Now, yes, they were voted on by, of course, the Bundestag, and I understand that, but she led them down this path. And this has created a debacle for Europe. Now, it's elevated France because EDF, the French nuclear power corporation, now looks genius because France really, is heavily endowed with nuclear energy, and they've never changed that. And it goes back to a point I've been raising about the Brits, especially right after Brexit. And in the blog, I probably wrote 3 or 4 or 5 blogs about it. Hinkley Point, which was a huge nuclear power generating facility that was being built by EDF. And I didn't understand why the Brits just didn't go float a massive bond to pay for all their nuclear energy, because what would have happened is that the ECB would have had to buy them anyway. It would have supported a French industry, the nuclear power industry, and the Brits kind of dropped the ball here. So I've been very critical, but the French look right on here, and the rest of Europe is really getting caught short-sighted here. And that comes back to the euro yen. I know I'm talking a lot about this, but everybody's talking about the weakness in the yen is due to Japan's reliance on fossil fuels, especially after Fukushima. But the Japanese can turn those outside, not Fukushima, of course, but they have a lot of other new power plants built over the years by Tokyo Power that they could turn back on. But is Japan any worse off in their energy policy than Europe is right now? I would be, I would argue vehemently no. So why is the euro yen rallying here? Now I respect it, and I said, yeah, I'm bearish the dollar, but the technicals have not given me a strong enough view into it yet. I have no, so I'm just trading it. And that's all. But the euro yen is perplexing to me because, again, it can't be just an energy issue. It has to be other issues. And I know a big part of it is the compression between, let's exactly say, the German Japanese 10-year has compressed by about 25 basis points. So that has something to do with it, probably more than most people. But the Japanese inflation is far more under control and lower than the rest of the developed world. So their real yields are, I would argue, higher than they are in Europe, of course, and certainly in the US. So I don't know, it's a complicated issue. I'm watching it closely. Actually, I'm actually kind of glad the yen's weakening, because when it starts to turn around, it'll be a signal that the world is changing so much. So we'll see. But that's it in a nutshell. It's a very long answer to a question that seems to bother more people than it does me. So I'll go with that.
Oh, it also leads directly into the conversation about what's going on with the world's currencies too. There's so much going on since the last time we've talked. I don't even know where to start. Is there anything in particular that you guys want to, any direction that any of you guys want to go? Any questions for Ira, or any directions that you guys want to go in? Because otherwise, I mean, there's just so much going on. I just want his take on everything, but I want to hear what you guys want.
Well, Manny, but I will say this, we have really done well with the yield curve. And again,
yes,
I'll trade, the 530, and now it was down back to 94 this morning. It's steepening out a little bit here, but I'm just going to warn everybody. And I think this warning has been dead right on target. The 5-year, the way it moves, the futures up, down, which reflects the yields, has been the driver of this market, certainly more than the 30-year, by the way. I mean, driving other assets. So it's still high on my list. Yesterday, we talked a lot about grains. Robert was great. And Brian. So that was really good. And I think it was dead right on target. I made actually a nice trade there. I had gotten out of all my metals yesterday too, because it hit some critical levels for me, which is where the technicals, support levels and resistance levels. So
you covered what did you cover? Copper?
Well, we talked about copper. Well, in that room, I talked about copper the other day. And you know what? Monday and Tuesday, well, Monday was Columbus Day, but Monday and Tuesday, all the Wall Street pundits were pushing the idea that copper was going to go lower. They were all, because of formation. I don't know. Now you see it exploded, which is not by happenstance. I thought that was absolutely going to be the case, but they were all down on China and everything else. So
you covered your gold too?
Yesterday I sold. Yeah, I was in live. I said, I'm getting out here for no other. Again, I'm just treating everything as a trade, and it got to some levels of resistance up at that 1800. So at 98, and I bought it back way too early today. So I gave some money back, but much smaller than they'd gotten out. But I just keep watching it. Gold for me, again, it's not the inflation issue. And I know that Bitcoin really bites into it. I can see it. So, but gold is never the inflation issue for me, because by the time you buy gold for inflation, it's already late. Gold is still and will be a barometer of central bank credibility. That's what it is for me. It has been that way. I've been talking about it for as long as, and with Santelli and others for so many years, which helped me catch the move beginning in 2000, 2001. I'd actually written a letter, never got published to the FT, that I wanted to, but when the Bank of England was selling its gold off at between $290 and $320, I said, well, I'd like to be able to borrow from a bank and buy as much as I can, but that wasn't going to take place. But So anywhere you want to go.
Well, we I don't even know where to start. So let's segue. I want to ask you a little bit more about if you see any more of a movement. No, that's not the right question. Just everybody, we keep talking about and hearing about now. We've been on top of this for a long time too. Is the move away from the dollar, and now we're seeing more and more chatter about a digital currency. Whether an asset-backed digital currency coming from the east.
Well, yeah, if you say that asset-backed, you use the parlance that everybody else is a stable coin versus just a digital currency. So
yes,
stable coin will be an asset-backed. And again, what will those assets be? Will be fiat currency, will be metals, we don't know. So, but we will, I think we're going to find out sooner than a lot of people think. But
okay, all right. And so with the I don't know, can we look at the recent movement of Federal Reserve Board members as a restructuring or reshuffling of the Federal Reserve Board?
you mean with the ones who've resigned and the ones who are going to be replaced?
Yes.
Yeah, I would say so, most definitely. Now, there's an article in the Wall Street Journal today. Everybody's got views on this. I always believed that Powell was not going to be reappointed. But most people, the betting line is, and I pulled back that bet because I thought at Jackson Hole, that was his effort to, that was his election, that was his campaign speech to be renominated, which for the life of me, I don't understand. But I think had he followed my advice to begin with, which is resigned when Powell became president, and with the say, hey, if you want me, fine, I'm here to serve you. But if you want to, pick your own, I respect that too. And he'd be in a far better position. But yes, I think there'll be 3 or 4 openings on the, I think one governor, 2 governors, there's 2, and 2 Fed presidents. So yes, there's 4. Will affect, well, let's see who he appoints. I know now that Powell is the odds-on favorite because by a lot. Again, he had diminished. I thought he should have resigned with this because, again, and this one I agree with Lizzie Warren. This is on his watch, and this is just so wrong. And it's not wrong. Let me stress this. Most of you have heard it from me already. It's not wrong because of what they were trading. That's where the media is just so full of crap. I don't care what they were trading. That's not what gets to me. What gets to me is that they go on CNBC or they go on Bloomberg or they go on Fox and they make statements knowingly that they're moving markets. Because each of them individually, if they're buying what the Fed is buying, when the Fed was busy and very active back, 15 months ago, they're not going to buy enough to make a difference. What irritates and what is so criminally wrong, and I mean criminally wrong, is that they're moving markets and have the ability to, it's almost like Henry Kaufman back in the 80s with what went on at Salomon Brothers. When you know what you're going to say and you know what's going to come across as a banner headline, and then it's, it gets picked up by the algorithms, who are busy chasing this. That's the irritant. That's the danger. That's the danger. It's not what they're buying. Because look at, now that they've dug into it, they're buying S&P 500 futures, okay? Mm-hmm. Who does that but idiots like me? But,
dual traders, yeah.
Right? But traders. But they have the ability to move markets. That's what's so wrong. And in fact, that journalist team that publishes Wall Street on Parade, they picked up my argument about that. And Kaplan and Rosengren, in the height of the last year in 2020, gave 37 interviews on electronic media. So they went and they dug through and really solidified the argument. That's what's so wrong about it. And I'll tell you what, and Powell has to bear that. You're the chair. And to me, you know, as I tongue in cheek would say, it'd be like me standing in the pit, and I know everybody is one way, as we would see, they're short, and I yell out a false headline that people go, what? You know, and all of a sudden it gets picked up all over the place and the market reacts, and then there's no context to it to support it, and it's just washes everybody out. How is that any different?
There was Ted Cole told me years ago, one of the I'll never forget it. I laughed at first, but then I got disgusted later. A peek in the deck is worth 1,000 charts.
Well, it can be, depending upon who you are and the way you act. Yes.
Yeah, I love Teddy. I miss him all the time.
I know.
I Scott a lot, but you know, isn't that the same thing? Isn't that what they're doing? They know what's inside the deck. They know what their are. So they go front runner.
No, they're not looking at the deck. They're making the deck.
Oh, that's even better.
They're not looking. It's not like knowing where the stops are. You know that you're going out and you're going to say something. So if it's forward guidance for lower for longer, or I'm getting hawkish, now maybe you sold them and you're buying them, you know, you'll buy them back once that, because it's going to be headline driven. And the world in which we live in, as I was stressed I've had to reteach myself for the last 20 years, is a world driven by algorithmic headline readers. And as again, I've argued at the CME board and with board members that there needs to be, and it's not the CME's role, and that's what they would tell me, and they're absolutely right about that. So the SEC, the CFTC, because there is a proliferation of news organizations that their whole basis is creating these headlines, crafting headlines to get as much volatility as possible. Now, that's why I so often caution patience, because we can use that to our betterment and get opportunities at price levels that you never would have seen, right?
Yeah.
So I believe this has been going on, and you could see the proliferation in today's world. And see, when you have press credentials, because the media and all the releases, like Fed, you know, they get the FOMC statement a half an hour earlier, and they're on quarantine. But they have the ability to sit there and craft headlines that are picked up by the headline readers, and they create massive amounts of volatility. And Matt, you and I have discussed this for so long. I'm sorry if it bores, but they craft it, it creates the volatility, and there's no context to it whatsoever. It's just a headline. And then once you get to the body of it, that's why we see so much, you know, major movements. It's all done to create volatility.
Mm-hmm. Yeah, there's no directional movement in the equities. We're at the top of the range. We're coming up to the S&P expiration target of 44.64 SEP expiration. You know, but we're just stuck in this big gigantic range, trading headline driven or news driven range bound trades, and it's been great. It gives us plenty of trading opportunity, but there's no directional movement to it.
Which is okay, but how many times are people like, that's the problem with the Fed guy. How many people get stopped out only to find out what the hell was that, or get run over? And I think even the big global macro traders, Tudor, Druckenmiller, others were they felt they were underperforming relative to the way that they had always acted, because they were getting beat up too, because the movement are so volatile, not just in the equities, across the whole gamut because of these. So you saw 4 or 5 years ago that they started admitting to this existence and started going more into electronic type trading. Because it was affecting them immensely. So they had to change their style too, right?
Mm-hmm.
Now then about 1.5 years, 2 years ago, before the onset of COVID, Tudor, he was very public about it. Well, I'm going to go take more control of this, and I'm going back to, the way we used to do this. And Druckenmiller closed his fund, and only, it doesn't matter. His family office is bigger than, most people who are fund managers could ever imagine. But they were going back because they had figured it out too, because the electronic wasn't helping them, and they were giving up their strength, which I think is, I have a similar strength, which is understanding the context of the underlying fundamentals and making it all work together. And you really couldn't do that with an electronic trade. Yes, you could, and you're not going to race the high frequency traders and win.
Not a chance.
You can't jump and sit it. You're just not going to do it. You're too late to the game. So you got to go back and work on what your edge is. My edge is again, context and nuance of what the markets are all about. And when I no longer think I can operate on that edge, then I'll close up and I'll be done. But I'm hoping to do this because my knowledge base is so vast. I hope I'm like Seth Glickenhaus or Roy Neuberger and can sit at my desk till 100 years old, if not more. Because once you have knowledge, every day of my life, I build upon my foundation of knowledge and continually test the underlying structure.
Ed's got a question, which kind of leads into tying together my question about, or my statement, I guess, more about the Federal Reserve, with the reshuffle of the Federal Reserve and heading more to a stable coin. Anyway, he wrote what he wrote was, you mentioned a few weeks ago that possible challenge to U.S. dollars world reserve would be a Chinese stable coin. If the U.S. wants to maintain its status, should we move first to deploy our own stable coin?
Yeah, you know what? And that's an interesting thing. And who asked, Ed?
Yeah.
Okay. So, Ed, I'm glad you asked that question, because I have to go back and pull. There was and somebody can Google it right now, that Leo Brainerd, who could be the next Fed chair, she gave a speech about stablecoin. I don't know. And she actually brought up the idea that a U.S. stablecoin could be, or any stablecoin could be backed by gold as well as other assets, right?
Uh-huh.
So again, until I see the makeup of it, I just don't know. And I just, from a historical perspective, and I think history is many times very important. That's why, because the Chinese were in the 1800s, when they were most put upon by Western imperialists and even Eastern imperialists, they were on the silver standard. So to me, a Chinese stable coin, if it's backed by assets, would have, to me, a significant silver component. So that's just my analysis on my own historical work. We don't know. We're all guessing at this as to what this is going to look like. Will it even take place? Again, I'm a wicked libertarian. It doesn't mean I don't believe in a social in a safety net. I do, but it's still individual rights. But I also understand community needs. It's always a fine balance, and to strike that balance. So, but I proceed, my first onset is to think in terms of libertarianism, and to that my right to privacy are so important. And I worry with the electronic money. I like having paper money in my pocket because it gives me, nobody can track me. My credit card allows everybody to track me, right?
Right.
And now I know, and of course, when I have this conversation with friends and of mine and family, you know, oh, you're paranoid. So I'm not paranoid. It's real. And it's the ability to control my money, which is what it's all about. Because once it's all electronic money, the Federal Reserve or whatever authority could take interest rates to -5% and force me to spend my money. See, now they can't. They've tried. Europe went to negative interest rates, right? Well, what do people do? I'm taking my money out of the bank. If the money's not in the bank, there's no velocity to it, so you fail. But if you go electronic, it's a different world. And they're still studying this, and you can't get away from the issue of the real importance of privacy. And actually, Europe is doing a better job because Europe has more respect for privacy, and you see it in the way that they want to control Facebook, Twitter, you know, and what they're able to exact from it and how they share it. The United States, because of the way the legislation was written in the 90s, and the best authority I know on this is Shoshana Zuboff, who wrote the book, The Age of Surveillance Capitalism, which they actually interviewed her, Social Dilemma, that movie. So, and I was glad because somebody told me to watch it, and I said, well, Zuboff, and they didn't know. So yeah, she's in there, and actually, but it woke me up to a phenomenal amount of what was gone. But I also read the book Big Data back in in 09, or yeah, I think that's when it came out. So I've been, it's one of those things that irritates me, and so they don't know where this goes either. Okay, there's a lot of gibbering because they're trying to get out ahead of the Chinese on it, because we know what the Chinese think about privacy, right? Well, you know, I actually bought Diddy stock after they beat the crap out of it. So I'm basically even. I'm looking at it right now. I'm basically even on it. But when I read why they were pushing on the Chinese tech firms, it's because the government didn't want competition for the data. You know, that's their primary reason with this. Because Diddy being a car ride service, well, it's like, you know, Uber and Lyft. They are gathering so much data about your personal habits and everything else, and they sell it on to every, you know, because that's a big part of their business, or what Shoshana Zuboff would call data exhaust, the trail that you leave. I was just in New York, in Queens, so and to the airport. So my wife uses Lyft. I don't have the app. I've never used an Uber app. I've never used an ATM. I know people will laugh at me, and it's not that I'm not paranoid. I just don't want that to share that much.
Well, what would you do if you went to a Sox game? Can't buy it can't even pay for parking.
Hey, I don't know if I said it in your room, but I've said it other places. When I went to the Diamondback game back in May, I was furious because I figured, oh, you know, I always have cash, because if it's not in my pocket, it's not real anyway. I know. I just can't help it.
No, I'm with you. I'm the same way. I can't stand it.
So I went to the Diamondback game, and you know, my wife said, "Should we buy tickets online?" No, fuck, I don't. We'll go there. They stink, and it was they were playing the Dodgers, so I wanted to go to the game. So, I mean, the place was empty, and I didn't have to sit within 100 feet of anybody if I didn't want to, but I go up to the window. No, we don't take credit card only, and it had to be to my phone, and I was furious. Of course, by the time I got home, I was already being inundated with Diamondback. You know, so they wanted my data just like everybody else, and I couldn't even pay the vendors for a beer for cash.
No. You got to give them your card. Same thing. So remember in the old days, oh my God, a couple of years ago, you buy a few beers and you're in the middle of the row. Everybody, you give the guy your money, and everybody passes the money down. They pass back the change. You know, they pass it. Now you got to pass your card. I'm not thrilled about that.
Thrilled? I'm furious, and furious doesn't even. So yes, so I had, and even if you go to a stand. Okay, which I was forced to do because I wasn't good. And I always buy beer from vendors because I, you know, give them a $2-3 tip. I don't care.
Yeah, me too. Yeah.
You know what? My nephews, I know some friends growing up. So it's like caddies. Having caddied, you know what? I overtip caddies so much, but I understand the job. Okay. So,
me too.
And my criterion is I'll tip a waitress 25% for carrying, you know, taking the order, placing the order and carrying. Yes, I know some are better than the others, but a caddy and I've had female caddies who would carry double back in the, you know, 80s and 90s, and it'd be, you know, 90 degrees outside. Of course I'm good. You know what? That's my mindset. So, but now I can't do it. I can't do it. And I'm not putting it on a card. So I went to the stand and I bought, I think they had Portillo's at the ballpark. So, Diamondback. But it irritates me. So, see now, if I was sitting in a Fed meeting and instead of asking Powell why there's a shortage of coins in the system, I would ask, are you aware that that electronic money drives the poorer segment of the population away from sporting events? And that's an issue to me, because the Fed's own studies say that the lower 50% of the lower 50% or 30, the lowest 30% of the economic ladder, 35% underbanked. Well, if I'm underbanked, I don't have a card. So how do I go to a game? So I brought this up with my son-in-law back in June because I was so pissed about it. He's a big Met fan. He grew up. Alex is a Cub fan. It's interesting. They both, when they got married, he wore Met socks. She wore Cub socks when they walked down the aisle.
Oh, that's great.
Yeah, and shoes. They had shoes. So I said, so I was raising this issue with him. He says, oh, what they do what the Mets are doing now and what Citibank is doing at Citi Field, you can buy for $5 a debit card at the ballpark. So I said, okay, so now if I'm if I'm one of the lower economic strata, you've now tacked on a 5%. If I had $100 in my pocket to go to the game with, which is most probable, and I have to buy a $100 debit card, you've tacked on a 5% tax for me.
Yeah.
Hey, Matt.
Yeah. Ed?
Hey, sorry, I'm not trying to interrupt. I just wanted to
James.
bring up a point here before I got to run. Ira, I'm wondering what you think about these supply chain issues. I mean, especially in agriculture. I mean, there's John Deere workers went on strike yesterday.
Yeah.
There's parts, tractor parts that literally there are no parts in the nation. I talked to a guy the other day and he had some little, plastic compression tank for this tractor, and there wasn't one in the whole nation.
Mm-hmm.
And fertilizer is another big deal. Yeah. I mean, these retailers out here, they're not. If you want to lock in fertilizer for next year's growing season, they want cash money today to even lock in your price, and they're still not guaranteeing availability. Usually, that you can go in and lock it in, they'll carry you for the, for over the winter, and they're not doing that. I'm just wondering what your thoughts are on, supply chain, and I mean, do we get this stuff resolved before next growing season, or what do you think?
And who's asking? I'm sorry, who is this?
This is James. James is a rancher out in Yuma, Colorado.
James, In Yuma, Colorado?
Yes, sir.
Hey, you're a hardworking man. And I appreciate it. Or a hardworking, that's tough work.
And a great trader, by the way.
Huh?
And a very, very good trader too.
Doesn't surprise me. And and yes, I do watch Yellowstone. I hope you're not, no.
I do too.
Yes, the supply chain issues are real, but it's going to be interesting. I'm going to talk about it from two perspectives, because this is, because I read Lagarde's speech yesterday, and this is what's going to keep central banks staying for longer, because they're going to say, well, we don't have to pay attention to again, that's the transitory nature of the inflation, because they're going to say these are just bottlenecks, right? And once the bottlenecks are relieved, prices will come down accordingly. Now, yeah, there's probably some truth to that. And I'm going to tell you, last year I did probably 4 podcasts with Peter Bookvar. I got one coming up in about 8-9 days. And Bookvar, I disagreed with him because I thought this was going to be, COVID would be much more demand situation, which it was at first. But he was adamant that this would be a supply issue going forward. And he was righter than right. And I teased him, and I was teasing him the other day, because the Fed couldn't see this, but gee, the Fed being behind the curve for a change in their thinking, how unusual. Yes, we know the answer to that. So, but these are real, because number one, probably the biggest issue, and Bookbar has been on top of this more than anybody, because he watches that CAS index, which is especially freight moving costs in the country, trucking costs. There's not enough truck drivers. Now Biden wants those, and has gotten relief from the longshoremen to have those ports open 24/7, which I'm sure will help somewhat, but you still have to get the stuff from the ports. And it's not a mistake as to why railroads are performing so well, because you can move a lot more stuff with less people. So, but even they are, you still have to have the capacity to move it. So, James, I think that they will be relieved. When? I don't know, but I believe that it'll give, the Fed will keep talking about this as a transitory nature of inflation, and they can be more patient. So in one way, that'll affect everything. And until you can get those parts, of course, or you can get anything. And of course, as they're moving, that's why I watch Mexico, because those melquiadores on the border, which have been underutilized ever since China devalued the currency in 1994. But I think a lot of business, if Mexico could get out from under their plague, and it is a plague of corruption, I believe that so much would be developing there, which is why, I was always bullish Kansas Southern for all those who followed me in that trade. I, of course, hit a double when a grand slam was on the bases. But James, it's a good question. And you bring up the fertilizer, and I actually had that discussion the other day when I did that with Eichengreen, because I brought up that issue because somebody else had talked about it in attacking Larry Fink from BlackRock, that the movement of ESG has meant that there's a lot less money available for the fracking world. Well, fracking created a big mess for Wall Street anyway. They were dragged into a situation, per usual. They thought they were going to rape, fleece, and plunder the oil patch people, but of course it winds up the other way, and they lost a lot of money. So, and then you throw in the regulations from the Biden administration in an effort to move to green or greenwash the situation. But the actual gas prices have soared, and that has driven. I mean, look at Mosaic, look at Nutrient. We can look at fertilizer prices around the world are very high. And that was, so let's talk about, you know, first of all, wheat prices have stayed high. And of course, the stain on my trading this year is called the oat market, because at $2.80 a bushel to 320, I couldn't talk enough about being long oats, and I caught the first leg of it. But we've made all-time high in the oats, because the drought in up in the Dakotas and southern Canada was so real, where so much of the oats are grown, and yet demand is growing because you've got oat milk and blah, blah. But look at the oat market. So farmers are going to be really hard pressed, because their costs are going to go up. They need higher prices. Now, a lot of people think that if fertilizer, and James, you can speak to this far better than I can, or anybody else can pipe in, but it takes a lot of fertilizer to reach those corn yields, right? A lot of nitrogen-based fertilizer.
Yeah, I mean, one pound of nitrogen per 1 bushel of corn.
Yeah. And so the beans can do it with less. So everybody thinks that beans, but bean prices have to go back higher. We made highs in the beans of $16.50 back in May, and we just dropped down under $12, right? Is that right?
Yeah, they've been getting hit a little, and yeah, that's the thing.
So,
I mean, you don't need fertilizer to grow soybeans, but you damn sure do corn.
Yeah. So everybody thinks that you'll see more corn planted, or I mean, I'm sorry, more beans planted. But if I'm the Chinese, and it's interesting, because when beans went up to $16.50 in May, I thought that was due to the Chinese buy-in, of course, for the previous 9 months, because grain prices kept going higher right into the face of the massive downturn of the global economy with COVID. And why were those prices going higher when we had record crops in Brazil and the US? So it had to be that there had to be a massive buyer, and that buyer had to be China. But when prices got that high, the Chinese are not stupid. And I speak of them as an entity, because they buy as an entity, and they set this as government policy. They're not, so they're not going to chase the market up. So when the biggest buyer in the market stops buying, then there's becomes downward pressure on the then the downward pressure develops. And then, of course, you had the Brazilian real, which had been strengthening for a good part of the year, turn around and turn weak, so that, you know, there's an incentive for Brazilian farmers to plant fence post to fence post, as we say. So prices did drop. But this was a discussion that took place yesterday. Yeah, I'd be looking, and yesterday we actually had news, and Robert confirmed it, that on Wednesday and Thursday, there was certainly, the Chinese bought two boatloads of beans, and there was another four boatloads of beans that were bought and nobody knew, anonymous. I guess one actually turned out to be Mexico, but I would, if I was a Chinese, I would certainly be looking to head back into the grain markets, because with the yuan holding where it is, and if you put up a yuan chart, you can see the Chinese currency is remaining strong. And I think that's because they're still buying things on the world market. Because why am I going to hold on to my dollars? If I'm right about the dollar, why you don't need to hold on to dollars. And the Chinese government isn't going to buy Maseratis and Van Goghs, so they may as well buy things they need. And that's really important to them, because, and actually Judd did some really good work with Stan in putting up beans priced in yuan and corn priced in yuan. And you see how low these prices are relative for the Chinese to the rest of the world. So very important, very important.
Could we get that put up on our CQG? Did Stan get that?
You can do it anyway. I can do it. If you got, if you have CQG and you have cash yuan prices, it's pretty easy to do.
I'll call Stan and see if I can't get him to put it up. That'd be an interesting look.
Yeah, it was really good work. But it's worth looking at. And I think these are all out there. So again, to me, all the BS that took place, and I'll come back to James about supply. Last year when grain prices ran up, it was into record supply. So there, of course, had to be a buyer. So that's why I wasn't going into the supply issue. I thought it was going to be more about demands and what was going to fuel that demand. And of course, that was central bank policy. So
Ira, I mean, talk me off this ledge here. I feel like it's like the perfect storm brewing for new all-time highs in this corn market. I mean, if we say, even if we lose 25% of fertilizer supply nationwide, shit, that's 25% off your national yield average, just, indirectly speaking.
Yeah, those are big numbers, right? That would be astronomical. And then the rest of the world is dependent upon it too. So, wow. James, I can't talk you off the ledge. But as you know, as well as everybody, the cure to high prices is high prices. Because I'm looking at cattle prices right now, right? I'm looking at the D's contract. We're at 130, which is pretty high. That chart looks pretty good too, set to go higher. So tell me what the cattle market looks like.
Well, that's the thing. See, we own a feedlot out here, and packer margins, shit, they're, I don't know. I think the last estimate this week's like 600 a head, but they've been up there 900 a head. These packer margins are insane. Historically speaking, fat cattle should be worth $1.70 right now. If you go back to 2015 and the margins and where they were correlated to today, I mean, they're just stealing these cattle. But I don't know. I mean, that's part of the worker shortage and labor shortage, the way they say it. But I don't know. That's my hesitation or fear right now is, I mean, if this supply deal, crop production, if they have troubles, like I'm thinking, man, this corn goes to all-time highs and you're trying to feed cattle $8 corn, that's very, very hard to do.
Yeah.
And if the cattle go with the corn, I mean, you see how high beef prices are now. I mean, what's that going to do? They're going to triple again if we're, feeding that expensive of corn.
Yeah. I mean, things could really get wacky here. And I tell you what, and I talked about it with Eichengreen. So wages are always sticky up, as they say, because once you start paying people more, you're not rescinding them, because you can see how many, as you talk about, we're a striking.
Oh, you're breaking up a little.
Oh, I'm sorry. James was talking about the strike at Caterpillar, right?
Yep. No, deer.
Oh, dear. I'm sorry. So I am a big fan of private sector unions being able to negotiate and get higher wages. I think the American worker, the private sector worker, again, not talking public sector. I don't like public sector unions. I have my views on those, and I come from a heavily union family with my grandparents, and I really would get earfuls from. But private sector unions, go fight and get all you can, because you've gotten the shit beat out of you for certainly since the air traffic controller strike that Reagan broke. Okay, so go fight and battle for every dime you can, because they've gotten the short end of the existence of what China brought to the world. Because China, I don't care what the Fed tells me, and I don't care what their damn Philip model curve tell me. Global wages, when the Berlin Wall came down And Deng Xiaoping turned China in 1979, and all those workers got freed onto the global economy. Wages were repressed because what would capital do? They say, okay, we're moving this business to where cheaper wages. So you either negotiate and freeze your wages and take less, or we're taking the jobs. And it's Germany, Gerhard Schroeder, before he left, but when he was Chancellor of Germany back in the late 90s and early aughts, putting in the Hartz, what was called Hartz IV, was German workers who were the most radical of heavy industrial unions. They saw what was going on with the opening of Eastern Europe, and they agreed to freeze wages. That's why Germany became such an export. They always were good exporters because of their engineering, but their wages, and why they kicked the shit out of everybody else in Europe, was because they did something about their wages and everybody else in Europe didn't. So German products, even within Europe, became much more competitive because the union said, okay, don't move the jobs. We'll be less intransigent when it comes to wage negotiations. And that's what took place. But now, as China is changing somewhat and moving a little bit more to a consumer domestic economy and not putting out as much, and you see that with what's going on with the yuan, because the Chinese did not answer the call of a global slowdown with an enforced weakening of the currency. That was a big shift. It's really what woke my eyes up, what opened my eyes to what was going on. So wages are going to be sticky up. That's not going to change. People at McDonald's are going to make $17 an hour. Where people used to talk about $15 an hour. Hell, you can't get anybody at 15. I see the signs here in Arizona. 17, 18, and signing bonuses. Well, you're not going to bring me on at $18, and then when you think that this is over, that you're going to say, well, I'm going to give you 14 now. No, that's not going to happen. That's not going to happen. And some of these private sector unions are now getting it and going, well, you don't have enough workers anyway, so we're going on strike. The hell with you. Go ahead. Don't meet our demands. See what happens. So
hey, Ira, it's Bill.
Yes.
Sorry, man.
Oh, great.
To disturb here, but I was just thinking, maybe that's part of the supply chain issue.
It is. There's
and because the wages, like shit, I don't want to drive a truck around for 16 hours a day. I think UPS and all these other carriers are talking about really working their drivers. And then you read articles about how people are quitting their jobs at an astounding rate. So I just find all this really insanely fascinating. I don't know what's happened to us. It's like we've all lost our collective minds. It's as if the smartest people, why is it that they end up doing the dumbest things, it seems? Why is that?
I'm gonna, what? First of all,
man.
But you can't, the American worker really has been the most put upon. You look at real wages over the last 35 years. Sorry, they've gotten the raw end of the deal, and corporate profits are far too high. Okay, and I'm a shareholder, but there is some reckoning to be done. So if the higher wages come out of corporate profits, that I would argue is probably a good thing, because I know it's a good thing because they have been so put upon. Capital has been rewarded far more than labor for a long time, and it's a pendulum. It's like other things in society, so it'll swing, and it's swinging now. But you bring up a good point. And anybody, and I don't know who's in this room, but I've sat on a corporate board or any board, school board, whatever. I haven't sat on that, but my wife, when you see the collective stupidity, people are really smart as individuals, but when they get collective, the stupidity rises to unbelievable. And I've seen it. And And it's like, I always have taught my
Yeah, I
kids,
gotta agree.
I always have taught my kids, I love people as individuals. They're so interesting, and even small groups. But when the group grows larger, I get nervous because I see things that you never see. And I know people as individuals, I go, wait, that's not what you, all of a sudden they get really stupid in a group. So I really, I love, my parents taught me to respect individuals from the, you know, as they would say, from the garbage.
Yeah, me too. I agree with that completely. But wouldn't it be interesting if they reframed this whole thing and said, you know what, we're going to cut corporate taxes, but we're going to request that the corporations raise their workers' salaries, and wouldn't that be a kind of a win-win situation for everything? But then government just seems to be in this wants to control everything mode lately, which is frightening, actually, in a way. Don't you think? Wouldn't it?
Yeah.
We need people to actually form some new friggin', I was about to swear, some new friggin' ideas here. You know, I'd vote for that in a moment, in a heartbeat. I don't know, would the corporations go along with that?
You know, well, I'll tell you what, it's going to be interesting to watch, because you're bringing up a very good point, because we're going to have a new prime minister. Well, he's in Japan. And this is actually what he has proposed. In fact, there's an article in the FT that I read. And this is one of his propositions. He wants corporations to raise the wages of Japanese workers. Here, let me see. I know I can find the article down.
Good. Why not? Let's go for it.
It's exactly,
I could use a new stereo.
It's exactly what you're talking about. Is that's so that what I'm saying, why I bring that up, is because it gives you a look that somebody now, you know, I like studying real world here. It's Prime Minister Kishida, who I'm pretty sure is going to win the election. By how much, we don't know. It's now October 31st. Here, I'm reading you from the FT article. I want to achieve a virtuous economic cycle by raising the incomes of not just a certain segment, but a broader range of people to trigger consumption. I believe that's the key to how the new form of capitalism is going to be different from the past.
Exactly.
Right? So
yeah, that's perfect.
I bring that up to you because this is real in real time. So this bears watching. You know, Japan will become somewhat of a laboratory of this. And yeah, and Japanese corporations, by the way, the big corporations. And he said in his interview, he talks about how you have to differentiate from the big to the medium and smaller corporations, because it's not a one. See, in this country, we do one size fits all, and that's not necessarily the case. The banks like that because the banks push for certain regulation, because big banks are much better able to handle the cost of regulation. You know, that's whenever you look to see what goes on, like Dodd-Frank, the big banks wrote that. And the smaller community banks, especially James, you know, or Robert, who, because he likes to go to tour because those are who's financed so much of AGCO's stuff. You know, I've had long discussions with Robert about that. The burden of meeting those regulations is just ridiculous. And it's driven a lot of those banks and winds up in consolidation of small and medium banks that would be better, who know their clients far better than the big banks and can know how to deal with them far better. But because of the cost of regulation, it becomes, Dodd-Frank was terrible for community banks, terrible. By design, by the way. Because
yeah, that I could, yeah, for sure. That's interesting you bring that up, because the Chinese kind of came to the point, they'd been modeling themselves after Russia, and Russia has been a disaster, of course, because their own central planning. So didn't Xi Jinping or one of these guys open up all the regional banks and said, hey, look, you guys figure out your own customers. And from there, the Chinese really exploded.
That was part of it. But they were, a lot of them were state-owned enterprises, and you had to and then they muscled them, to
yeah. Oh, well, so, yeah.
There's a lot of issues in China, but it was actually Deng Xiaoping who opened it up and said, look, he said, don't tell me about the theoretical nonsense. He had a phrase for it. And practice is the sole criterion of judging truth. So show me what you're doing and let's analyze it and know what works and what doesn't work. Gee, what a novel approach. When and I'm not talking about rapacious capitalism of the robber. I'm talking about when capitalism is allowed to work, as Joseph Schumpeter called it, creative destruction. When you see what works because the market tells you what works, then certain businesses fail. Stop protecting those businesses. They made a plan, yes, and people are going to lose jobs as part of it, but then comes the next one, right? We go from buggy whips to tire manufacturers, to battery manufacturers, everything that goes into a car. So,
yeah, exactly. It's the guys on the ground who come up with the best ideas.
Oh yeah,
and those are the guys you can't cut off, but we seem to want to cut them off because they're just the little guys.
Yeah,
I don't know. Maybe that's just my perception.
No, because the big guys want to put obstacles in their way. So number one, either cheap, right? Yeah, I mean, it's as old. This is not new stuff. It's as old. We can go back and look at the robber barons, right? All the corruption after the Civil War, before it's been going on forever. And I always listen to people, the Chinese are stealing our technology. Well, I'll tell you what. The most important thing that happened in the United States in the 1790s was a guy named Sam Slater, who worked at a cotton loom place in England and stole the technology by memorizing it, knowing how to put together, and brought the power loom to New England.
Yeah, that's right. And they pretty much wiped out the industry in England just by the competition. Yeah.
Right. Yeah, absolutely.
It's amazing.
Absolutely. So it had a big thing. Yeah, these are not new things. It doesn't make it right, but that's economic history and reality. So I have to, but we learn and try to react. So your point is really well taken. Hey, they know what to do, but as they say, capitalism without failure, without bankruptcy, is like Christianity without a concept of hell. Doesn't work. You've got to fail to keep capital honest. That phrase. Moral hazard, in which the Fed would step in to protect everybody. Well, when you create moral hazard, you create zombie firms, and that's what Japan showed us. They kept alive so many companies because they had a social contract with the workers, but it didn't serve them very well.
Right. And then that kind of brings up another thing, is the junk bond thing is really blowing through the roof, is it not?
Which one? I'm sorry?
The junk bond market is kind of on the demand side, is it not? Is it?
Yeah.
No. It has a big bid, which you would think that's madness now. But, but this is a mad world.
Well,
and we're just sitting in it.
That's the junk bond is a reflection of central bank bond buying all over the world, right? Here.
Oh, right.
I got a sheet in front of me. Yeah. So and I'll give you the 10-year. I'm not, because if I go to the 2-year, let's go to the 2-year. So 2-year French debt, okay, government debt. What do you think the yield is? 2-year. So if I buy I don't know who would buy it, but a 2-year French bond.
Well, anything from France, I'd kind of shy away from, but.
Oh yeah, okay, but
I know,
Ira,
I have no idea.
the nominal yield on a 2-year, and I'm not going to the 10-year debt. I'm going to go to negative 68.
Good Lord.
Okay. Now, Portugal, that bastion
Oh
of,
dear.
right? The 2-year yield
Yeah.
on a Portuguese government bond is, my math here, negative 76. Negative 76.
Tied me up. Oh my God.
Belgium, negative 69.
Oh God.
I'm going to keep going here. In Japan, it's robust. It's a negative 11. Let me keep going because you really have to hear these out. In Ireland, the 2-year government bond is negative 63. That's what the government can borrow at. You're paying the government 63 basis points. Now, it's probably just the European Central Bank buying them because who else would buy this? In Denmark, who's not part of the ECB, by the way, their yields are negative 61. Greece, we all know about Greece, right? The 2-year bond in Greece is negative 36. That's Greece, which 6 years ago, you could earn 40% on a Greek 2-year note. 40%. So you would have liked to have been long. The Netherlands, of course, is negative 65. So, okay, I've colored it for you. So why not buy junk bonds at 4% regardless, right?
Yeah, right. I see exactly.
And
wow.
That's the problem of what the center, and that's the media drives me crazy because, they're not having it. They repeat and repeat and repeat the Wall Street story. Oh, it's not because of what the central banks are doing. It's absolutely. And that's my issue. And I'm going to come full circle here with the dollar. Why is the dollar? Why is the dollar going higher a problem? Again, and these are real numbers, or they're real because they're all that we're given to deal with. So I have to deal, we can argue about what inflation is or isn't, but I can only deal with what I've been given. So if I use the Institute of International Finance, and really, as I talk about in the podcast, that article from Gillian Tett, global debt, total global debt as measured by non-financial and financial, private and public, it's probably higher than that, but at the end of June was $296 trillion. I'll say that again, 296 trillion.
Good Lord.
In the second quarter, now that issue is only a problem if you can't finance it, right? So if the economy turns down, the global economy were to turn into recession, it would become problematic no matter how low interest rates are. But what was interesting, two things from her article, was that, and this is from the IIF numbers, is that in the second quarter of 2021, global debt grew by 10%. So we went from 270 trillion to 296 trillion. Now, certainly, as Eichengreen taught, it's not all dollar denominated, but a lot of it is dollar denominated. So if the dollar rallies, and Matt, that brings us back to what I've talked about. If you were to see a 10% rally in the dollar, so that would take us back the highs made in 2020 at the height of the COVID scare. Well, it wasn't a scare, it was real. So Well, let's see. Let's see. That's the wrong chart. I'm going to my chart. So I'm going to look at the dollar index. So the high made in the dollar in that panic, and when there was a shortage of dollars around the world because everybody was searching for. So the dollar got up to, I'm using the dollar index, got up to 103. Right now we're at 93.95. So if we rallied another 10% from here, which would take us back to that high level basically that was made in March of 2020, I think it would be disastrous for the global economy, because the huge amount of that dollar debt, which by the way, is one of the negative fallouts from what the Fed has done, because by keeping rates so low for so long, meaning 12 years already, 13 years, it's promulgated people borrowing in US dollars. And I raised that issue again, because I used what happened in Switzerland, and even Eichengreen had to give that, but he backed it back and tried to soft pedal a little bit, but that's okay. The effect is still the same. So a 10% rise in the dollar would create havoc for borrowers.
Yeah, for sure.
Right? Because
Oh yeah, no,
a 10%.
that would be a disaster.
I'm
just thinking about, sorry, I was just thinking about the real estate market and
yeah,
how it's just gone batshit crazy.
yeah.
Like Lois and I are looking at just downsizing and stuff, because I'm about your age. I think I'm actually older than you, Ira.
Well, I'm 68.
I'm 66, so I'm right behind you.
Yeah.
All right, well, fair enough.
All right.
So yeah, you know, it's time to downsize, and might as well kind of get out of the situation here.
Yeah.
Don't need the size, but you know, we're looking at places there's no supply, and then there's a couple of houses come up, and we think, oh yeah, well, that's interesting, but the real estate agents underprice everything so badly that they get a gazillion offers. There's one place there were 26 offers, and it went for 46% over asking.
Yeah.
46%. Started off at $795. It ended up $1.4 million. Yeah, and that's in like Markham, just outside of Toronto. I mean, give me a break.
You're hitting me where
madness.
I just sold a house in Lincolnwood.
Yeah, I remember. Yeah,
and I believe me, the people who bought it, and I was just back. I went home for the first time since we closed. Well, I've been home since April. I still call it my home. I guess wherever you have your people buried, that's your home. That's the way I look at it. So
that's true.
My parents and my siblings and other loved ones. So it'll always be home. But I had never met the people, but I actually went and rang the doorbell and talked. I didn't go in because I don't want to see the changes they've made. 38 years, I was very attached. It was a great home, and yes, you always have some sadness in your life, but it was filled with such joy and happiness raising my kids, and it really served us well. So I have great memories, and I gave the house away because my disdain for realtors, 98% of realtors, because the way that the metrics that they use are just a joke.
Oh, it's terrible. I love it. They're so sweet when they're setting it up, but as soon as there's an offer in, they don't work for you anymore. They work for the guy making the offer.
Oh yeah.
And the pressure starts, and we found somebody who's actually really, really pretty good.
Good. Hold on to them. I use family.
Oh yeah, it's hard.
That's always a mistake. Just always a mistake. And I knew it, but sometimes you buy family peace and, prevent frictions that you don't need to have. But as my wife and I rationalize,
yeah, it's always an issue.
Far more financially astute than I am. I'm living in Scottsdale. This is the hottest market. So when we bought here too, you catch lightning in a bottle. It's like everything in the markets that we're discussing. It's all give and take. So yeah, we didn't do well here, but but where we had moved to. So, okay. It's just the way things balance out. And if she kicks me in the ass and says, get over it, I say, I'm over it.
Well, I think real estate is all relative. It all goes up and down kind of together.
Well,
Don't you think? Like the more expensive properties will drop in price, and so will the medium and other properties would drop in price.
Well,
according to demand. Who knows?
See, that's an interesting way, and that's, I guess, and everybody says location, okay, which is why I've never really done well in real estate, because see, I look at things as replacement value, because it's the way I value stocks. It's the way I value a lot of things. What's my so as they teach you via Tobin's Q. And
right. Well, that's a good way to think of it. I've never thought of it that way.
Well, I mean, okay, I understand when things are booming, you're overpaid. But then I look at it and go, well, if I can buy a piece of land, and Arizona is interesting because all there is land. I watch it when they build homes here, they build, huge developments because they can acquire the land. And I can buy a lot where I live now, even though it's mostly built out. There's only like, I don't know, 15 or 20 unbuilt lots that people own. I could build, and really, if I wanted to undertake it, it'd be much cheaper. Right now, maybe not because of the supply constraints that we see, but at some point you go, I'm not paying $500 a square foot, not when I can build for $240 and so, and that's the way I look at real estate, so when you come with comps and to me, what would it cost for me to build this exact house today? Now, there's a time, I know there's other elements in it, but that's the way, outside of when there's booms and busts, which of course real estate always endures. So when, we saw that in 04, 05, 06, we were in a boom and people were willing, because you always hope that you can, again, Rich Dennis's famous theory, it's not the greater fool, it's the slower fool. If I can get out of this, and dump it on you, I just need a slow fool.
Oh dear. I could see that. That brings up the other thing, the housing thing. The lumber market has been batshit crazy, that's for sure.
Yep.
But it's settled down really quite nicely. And I wonder if that applies to James's situation with the fertilizer. Lumber, as far as I understand, it just got constrained because of tariffs on BC lumber,
right,
that were put in place. Probably, was kind of dumb to do, but the previous administration had done what I liked a lot of what he did, but some of the things were a bit off. That was one of them. Yeah. And then BC also had an infestation. They had to get those trees down quickly before they all turned to trash. And so then COVID hits, and we've got lumber mills shutting down, and then the price just went nuts, absolutely nuts. And I'm wondering if the same kind of situation is going on with the fertilizer thing. And then the wholesalers are, as far as I understand, are overloading on a lot of on these supplies as they can get them. So I'm wondering, could that be the same kind of situation in the fertilizer idea? I have no idea. But, markets have these beautiful parallels that you can kind of glean from. And there's other economists that I know use like lumber and gold charts to kind of map out how the general economy is going to run. Like some Michael Gaid, I think his name is. It's an interesting guy. Well, I don't know. I just wonder what your thoughts would be on something like that.
you know, it's hard to make trees, but that's not what the issue is. Of course, it on the
Takes a while.
it's not hard to make fertilizer if you have the needed inputs, of course, into what is the favor Bosch process of ammonia and the, you know, yes, nitrate, you know, you can make it. Of course, you need the ingredients. So that's what the Fed's banking on. So when they talk transitory, they're looking at these bottlenecks and go, well, once they're exactly what you're talking about. So once they're relieved, the prices will fall dramatically. The prices of cars fall dramatically. The prices of fertilizer will fall. Lumber, right? That was Powell's favorite choice, and it's amazing how they can what's the word? Pick the low-hanging fruit, because lumber prices ran up and lumber prices came running down. See, that's transitory. Yeah. And now they're moving back up again. So that's what they're banking.
That's true.
What you're talking about. That's what will relieve the issue and make it all transitory, is if you have a gusher of supply, and it'll drive prices lower. I mean, in a way, that's why the grain markets are really interesting to me right now, because I want to see what, you know, they're feeling pretty comfort. You know, they're watching bean markets and they're listening to what's coming out of the Midwest. But I tell you what, this is going to be interesting. And I don't know whether James can hear me, but when you have $7 corn, I'm sorry, when you're at $5.50 corn, which is pretty historic, you know, it's a good price for corn. Here, I'm going to pull up let's do a little work here. I'm going to put up a 200-month, I'm going to pull up a 200-month moving average, 200 months of corn prices, okay? 433. That's the 200-month moving average. Right now we're trading on the lead D's 526. So we're above. But if you go to $7 corn and farmers can't make money because of the, you know, between the land, and I know land prices for agricultural areas are screaming. You've got higher input costs and you're not making money. That'll be really ugly, right? It doesn't get uglier than that.
Yeah, for sure. And then the price of crude, I'd love to ask James what the fuel costs have got to be for some of those to run some of these farms. And then crude's just gone absolutely crazy. I'm hanging on to a long here from yesterday at 81, wherever it is. It's down there somewhere. It's up, you know, they're safely at 82.20. People are talking about going at $100. Who knows? 84 is in sight within, and you know that's just that's another supply issue, I guess. Really, the Saudis came out and pretty much just gave West the bird when you know, nah, we're just gonna stick to the 400,000 barrels. You know, a nice big FU.
Oh no.
And it's going to be very, very interesting.
Well, I thought it was more interest that we went begging on hand and knee for them, you know, the Biden administration for them to export and ramp up their oil production.
I know, but the United States and Canada, we could fill that gap within seconds.
Oh, Canada, yeah. You know, I've been long the Canadian dollar.
Oh, it's horrible. That's just maddening.
I am, unless there's really anything else pressing, I'm going to have to, I hope.
Yeah. Ira, look, thank you so much for talking to me. I really appreciate it.
Yeah.
Really appreciate you coming in here, you know, and listening to you. And it's just fabulous. It's a gift. It really, really is. I've watched you for years, you know. like
Yeah.
coming on with Santelli.
Yeah.
Yeah, I think it was great. I was just this little schmuck from Scarborough, Ontario, trying to figure out these markets and stuff. And I thought, wow, everybody on CNBC must be really smart. And then I figured out the only smart guys on the place are Santelli, you, and who's that? Art Cashin. That's
Oh,
it.
I love it.
Everybody else is a fucking idiot. And I'm sorry, but that's.
I love Art Cashin, and
I know he's a fabulous guy. I try to look up stuff on YouTube. There's nothing. Just nothing. Oh,
actually, I had never met him. He would pick up stuff from my blog. He would say, you know, I'm going to use this. Yeah. So in like 2015, I went out to New York. I was visiting somebody else. So he said, come on down to the floor. So he gave me a personal tour of the New York Stock Exchange, which was, and I just love, you know why? Because he's got wisdom of ages of being,
yeah.
He's a practitioner of the market. You know, look, I have good theoretical basis, but it was like the podcast I did with Eichengreen, and I was a little nervous of it because it was going to get too wonky and too theoretical. That wasn't going to help anybody who I'm really speaking to. So, but I was able to push back enough, and I got really some good feedback. But thank you for your kind words. Matt, anything else I can help you with?
Yeah,
No,
that's okay. Thanks, Ira. Sorry.
Thanks. Oh, great conversation. There were a bunch of questions that came in late, so we can always follow up on those
What do
next
you,
week.
what, give me a, what's,
See one of them. How would the Fed get around the issue of private banking credit creation if a central bank digital currency becomes a standard? And how would the government appease the private banking sector?
all right, so put these on ice, and maybe I'll call in, we'll do another one next week, and we'll get to these.
All right, beautiful.
I think these are important questions. And I want to, listen, it's not that I'm right, but I'm going to give you a perspective based on my analysis of not trying to sell you something outside of knowledge, you know, and get you to understand and show it, well, yeah, maybe that's, and again, it's not what I'm going to help you make, it's what I'm going to help you save if I do.
Yeah,